Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. In this video, we continue by examining specific markets, medical-only systems, and international trade barriers that hold cannabis companies back. This leads to what people call a debt trap. The company takes out a loan to stay alive, but the interest on that loan grows every month. If the laws don't change fast enough, the company has to take out more loans just to pay the interest on the first one. When investors see a company with a lot of debt and no sales, they start selling the stock. This causes the stock price to crash, making it even harder for the company to raise money later. The problem with political promises. You've probably heard a politician say they'll legalize cannabis soon. They often do this to get younger people to vote for them or to sound modern. Unfortunately, politicians often fail to follow through on these promises. They might face pushback from other parties, or they might just find the process too complicated to finish. This creates a cycle of hype in the stock market. News comes out that a law might pass, and the stock price shotguns upward. People get excited and buy in at high prices. Then, months go by with no actual change. The excitement fades, the promises are broken, and the stock price falls back down to zero. If you buy a stock based on what a politician says will happen in a year, you are gambling on someone else's career, not a business plan. Specific markets and stocks to approach with caution. There are several parts of the world where the progress of cannabis laws is moving at a snail's pace. You should look for patterns of failure rather than just individual company names. Many regions in Europe and parts of Australia are excellent examples of this slow crawl. While these places might have a medical market, the move toward recreational sales is stuck in a loop of debates and pilot programs. If a company's entire value is based on the idea that a country will fully legalize soon, you should be very careful. For example, some countries in Western Europe have talked about legalizing for years, but they keep adding more rules that make it nearly impossible for a private company to make a profit. These regions often favor non-profit social clubs over big businesses. That might be good for the citizens, but it's terrible for your stock portfolio. Medical-only markets that are not growing. Some countries have legalized cannabis, but only for very sick people. This is often called a medical-only market. While this is a great step for health, it is usually a very small market for a business. The rules to get a prescription are often so strict that only a few thousand people can buy the product. If a company is spending millions of dollars to build a massive greenhouse in a medical-only country, they are betting that the laws will change to allow recreational use. If that law change is 5 or 10 years away, that greenhouse is a giant waste of money. The stock price will likely stay flat or slowly drop as the company realizes the market isn't big enough to support its size. International trade barriers. Selling cannabis isn't like selling shoes or laptops. Every country has different rules about how the plant can be grown, tested, and packaged. This makes it very hard for a company in a country with slow laws to sell its goods somewhere else. If a company is stuck in a slow-moving home market, they can't just ship their product to a faster-moving neighbor. By knowing where growth is limited and why, you can make smarter decisions and avoid companies trapped by slow legalization. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.